Welcome to the Cashflow Academy Podcast. I'm your host, Andy Tanner. This is where we make investing simple. I'm here with my good friends, my trading buddies, Noah Davidson, Halliday. Great discussion ready. We've decided to speak a little bit about the biggest trends. What are the 2 or 3 big trends that might keep pushing through, even if we have a general market trend? Where are those safe havens? Where are those oasis, even if the market starts to pop a little bit? So we're pretty much in agreement on this, as we talked before the show. So we thought, well, let's share it with everybody else and see what they have to say. Go to yourinvestingclass.com and find goodies there. Like, subscribe, notification bell, tell your friends if you like this type of content. Let's begin with Corey this time. A little introduction briefly.
Yeah, so I got my start in the markets a couple of decades ago, and I've traded about every market imaginable, stocks, options, bonds, Forex, what have you, and went the traditional route of licensing, worked my way up the ladder, became a Series 4 option principal, which is the head of option trading, managed hundreds of traders at a time, and I've been in the education space for over the last decade since I retired, and love it. Love everything to do with the markets.
Fantastic stuff. Noah.
I'm a recovering technical analyst. Now, I got my start really trading. Like, that's kind of what got me excited about the markets. It was not so much the idea of investing. It was the idea of I can trade and make money quickly, fast now. Over the years, I mean, I've had success. I've had great successes with trading, and I've had big misses with trading. But over time, spending time with people like Andy and Corey has helped me, and getting older probably, has helped temper me and kind of oriented me more into an investor who likes to read charts.
Temper you. Temper Noah. They help temper me. Okay, those were all lies. Hey, you're not recovering. You are a hopeless technical analyst.
I am a hopeless.
Well, in fairness, he is recovering because he's got so many injuries from his
goodness.
Crash.
Slows you down a bit. But I do love my technical analysis.
No, it's indestructible.
I love my chart reading. I love my option strategies. It's just
best trade adjuster I've ever seen.
So I read charts and I try to adjust trades to reduce risk, to mitigate lock in gains, and that's kind of the way I think about it. Is a technical analyst's ability to forecast the market is like a week, maybe. Beyond that, you got to get back into your fundamentals and trends. So talking about big trends, I think, is a big important thing.
Big trends are important. So we've talked a lot about the change in the timbre of the market. Might be a good word for that. We're always cautiously bullish by nature. All investors are, but we're more extra cautiously bullish, and yet there are a couple of things that I think are not only helping support the market now, but there's opportunities. And I was on, I do 2 podcasts. We do the Cashflow Academy Podcast. I also do the Stockcast, where the folks at Rich Dad will interview me and get my opinion. And I thought I'd take one of the topics that we spoke about and interjected it because it happened to be one of the trends. I think there's a great remedy for the anxiety around AI and job loss. I think if you're a white collar guy, it's an interesting thing. I drove around in my dad's Volkswagen bus as a kid, beat up Volkswagen bus. And I grew up in the 70s and 80s, mostly the 70s, where there was it was almost an assault. In fact, you can find public service announcements, and propaganda is really what it is in terms of propaganda in terms of working with your hands.
Yeah.
I remember there were little brochures that would come through in grade school that said, the ditch digging. We look down on it. We drive in my dad's van and we'd look out and we'd see a ditch digger. And my dad would say, look, that's a ditch digger. You don't want to do that, son. Well, I remodeled our home in 2020. And let me tell you, those guys made bank.
Yeah.
I was like, man, that guy digging that ditch and that guy putting in the floor and that guy doing the, all that type of stuff. I couldn't believe how much they were making. It's like that South Park episode where the plumber drives up and he's wearing a Louis Vuitton baseball cap.
Yeah.
That's actually not that's not fiction.
Far-fetched, yeah.
That's real. So anyway, now we're changing. All the blue collar guys, we're looking at each other and like, man, AI, it's hard to build a robot to pick a strawberry, right? They've done it. It's hard to build a robot to assemble an automobile. They've done it. It just doesn't seem that hard to replace thinking anymore, especially menial type of thinking where you just got to build a spreadsheet, or you just got to, do some word processing, or you just got to write a blog, or you have to collect a brief or find case law, or, any of the other searchable, logical tasks. So if you have some anxiety about AI replacing you, your remedy is to own it.
Yeah.
I think you got to buy more stocks now than ever before. And I usually stay away from comparing asset classes because I love business and real estate, stocks. I love all of it. But I got to tell you, the upside in stocks right now, where are you going to have an explosion like we're about to have in business with the technology that's going on? I mean, yeah. I'm still going to invest in real estate because it's a necessity of life, and there can certainly be swells in it, and the leverage you have helps and all that. But as far as pure explosion of value that you can give somebody, and value you can give the world and the masses, and the chance to have an investment that just explodes, tech is on the precipice. Did I say it that right that time? I got it right that
Nailed
time.
it.
Precipice of two frontiers. So we're going to talk about AI, and I think we ought to talk a little bit about quantum computing, and it's kind of weird. I like Joe Rogan.
Yeah.
Remember when Joe Rogan was interviewing Bill Burr, and they started talking about COVID, and Bill Burr goes, well, no, stop. I'm not going to have it. You're not a doctor. I'm not a doctor. We're not talking about COVID. Yeah. We don't know anything about this. Why are we going to act like we know about it? So for me to act like I know about AI and quantum computing might be a huge misstep, but we've studied as much as I can on it because I think it's a big deal.
Well, and to your point, I mean, when you're talking about if you're worried about job losses, go invest in the AI. That's what corporations do. If Google finds that they have a competitor, they go and gobble them up, right? If they're like, oh, this company, and of course, they create monopolies of sorts, because if Google controls search and nobody else can really compete with them, well, they got a nice little business opportunity. And Facebook did the same thing. Facebook saw the writing on the wall that Instagram was trending that way, and they said, well, we're going to buy them up. And so that would be kind of the idea, is figure out where you're most vulnerable and why is it that this other company has the potential to replace you. What is it that they're doing, and so on, and then figure out how to purchase them. And I think to your point, I mean, AI, when you look at the way that it can transform the world, I mean, just the ability to do so many things for you, it's revolutionary. At the same time, when you look at investing, I worry that you're probably going to see huge losses in corporations first, building out AI and investing in that. And I mean, because Google and Apple and Amazon and all these companies want to be first and biggest, and so they're investing billions. It's going to hit corporate profits initially for hopefully the big payoff down the road. And so there is a little bit of nuance, I think, in terms of how we might be able to pick up some of these investments. Some of the strategies that we teach are, how can I buy them on the cheap when maybe in the next year or two, they're actually seeing a little bit of a hit because they're spending so much. I mean, these companies, nuclear, we'll talk about nuclear energy because that's a piece of AI, but they're going to spend, they've already signed up contracts to spend billions of dollars to build out these new nuclear plants. Yeah. Well, that's going to hurt them initially, but it's going to take care of their AI energy needs down the road. And so that's how investment works, is putting some money to work now for the bigger benefit
and
later.
Part of me feels like the current AI race, it's an arms race, really, at the end of the day. And it feels a little bit .com-ish in the fact that the enthusiasm preceded the big profits.
Yeah.
The enthusiasm for these companies that were, venturing out into this new internet thing. I mean, that was such a nuance. That was such a new thing. And the survivors of that initial correction where, again, the investment dollars came in, and those that actually produced built and invested in the infrastructure and grew the companies out, and those that, they talked about how much money they had raised and all the venture capital going into it. After the initial enthusiasm, then you have the companies that emerged, that are really the biggest companies in the world right now.
Yeah, they are.
And so I think that's kind of where we are right now with the AI. Is the hype is there, the enthusiasm's there, and because it's an arms race, like I don't know who's going to end up dominating AI, but I know they're probably going to be using NVIDIA chips. I know they're going to have to build out the infrastructure to support the energy needs for it. Like I can't predict who the winners are, but I can see the general trend of that.
And the winners will probably be it's a 2040 story. It's like, we're in 2024.
Yeah.
When we're talking about the massive profits that they're making from AI, it's probably 2040. And will it be some of these biggest companies? They've got the advantage because they have the billions to spend. They have the Apple and Microsoft and Amazon. They have so much. So they've got the lead by far. I mean,
I said this, I want to throw this out to you guys. I said this in the podcast, in the Stockcast that I did earlier. And you mentioned an arms race. And this is so much different. AI and quantum computing and nuclear energy, those three ideas are different than the internet was. The internet.com boom felt more like those winners and losers. It felt like crypto and NFTs. We hired these people that haven't done anything here, but they did stuff over there, and we've raised a lot of money, but we haven't made money. Here, it's a little different, I think, in that you mentioned an arms race. I think it's both. I think it could be described as a gold rush, and I think the internet was more of a gold rush. Oh, there's opportunity here, there's gold niches. Where you mentioned it's an arms race, and I call it a space race, is you have Sputnik go across the sky, and now there's a fear that the Soviets get to the moon first. Well, the stakes to get to AI first, like true AI, like general AI, general intelligence AI, the space race, the fear element is as big as the greed element. In other words, there's a greed and a gold rush in AI, but there's a fear that someone else might get there first. So the investment, the amount of money and the amount of energy to get there first, manpower, woman power to get there first, it's massive. And I'm not sure, I don't know enough about the technology. Do you have a father-son duo, a couple of PhD nerds working in their basement like Steve Jobs was building circuit boards? There's a million of those guys, and they come up with a big AI billion-dollar company? Maybe, but not as likely, I think, as Corey says. IBM, Microsoft, Meta, Google, NVIDIA, and not just those. When I talk about job elimination and the fear of job elimination, these technologies will spread out and solve problems that are in McDonald's, that are in regular DuPont, regular companies, financial companies. So when I say own technology, you're not just owning the people who are creating it. You want to own the people implementing and benefiting from it as well. Because whatever job you're in, if it got replaced by AI, you want to own the company that replaced your job.
Yeah.
True?
Yeah. I mean, I look at it from my own needs and what I might be interested in using AI for in the future. Every time tax time comes around, I always feel like I do all the work and compile all this stuff, and then they just know how to put the numbers together or whatnot. I mean, imagine being able to just import that information into AI and it spits it out in a matter of a minute or whatever it takes, and maybe less than that. And here's all your numbers, and the documents are done to the IRS and this and that.
And it can read that 5,000 pages of tax code better than any human can.
Yeah. And it's
on and on.
one of those things where that's just a small sample. Anything, I don't ever work with lawyers really, but anything associated with them in terms of, if you could just plug that into AI and get all this feedback, and here's how you set up this corporation, and here's how you do this and that. I mean, it's revolutionary.
The white collar thinking stuff is tough.
It's only a matter of time till I am replaced by a robot here. Like, it's just like you're gonna come into the podcast one day.
Should we tell him? Should we tell him, Andy?
Wait.
All three of us are avatars. Yeah. None of us are real. Actually, these are just our avatars. We're really on the beach somewhere.
Yeah, exactly.
So quantum computing that's been a rabbit hole I've been going down a little bit. And the idea of quantum computing, you have the old you have the mechanical calculators, that worked on mechanical things. And then you went digital, where you could have a bit that's on or off, positive or negative, charged, not, however you want to talk about that bit. And just the ability to transduce sight, sounds, video, logic, math, computations, everything into that language a bit is phenomenal. You get these chips that are incredibly small that allow them to go faster. Great. Quantum computing is a little above my pay grade intellectually, in that you have these qubits where you have everything that exists between that 0 and 1. And from what I've read and studied, you're not going to have quantum computing doing better video games. That's not what they're for. But their ability to crypt or decrypt in cryptography, and their ability to analyze biological challenges and really complex problems with lots of variables to try to find solution to those problems. The potential of this is just, and the speed at which they can do this, that's why they wouldn't be investing this much money in it if it were
this is where
making progress. It's happening.
And this is where AI, to use a healthcare analogy with that, imagine they're able to find these solutions to complex health issues. Cancer, as an example.
Would save diabetes.
It might be a situation where basically, let's say that Microsoft wins in that space and they solve a big problem with cancer. Well, Microsoft just became a biotech company.
It's crazy.
So now they're
IBM.
making profits, and they partner with whoever or whatnot. And now they're making profits off of healthcare. And you're looking at IBM and you're going, well, how is IBM? IBM has nothing to do with, solutions to healthcare. Well, they just did, because it's their AI system that figured it out. So the possibilities, are mind-blowing when you start thinking about the companies that have AI. If they can solve solutions,
that can bring utility to it.
Oh yeah. And then you're looking at it from the standpoint of us as human beings. I look around this room, we've got cancer survivors all over the place. I had it twice. Imagine the ability of AI to sort of predict and say, okay, here's things that you have to be doing, and here's the probability. It can get a little out of control, but they might be able to basically predict cancer even before it happens, type of thing, and so on and so forth. So there might be remedies.
Be able to predict that just by your consumer habits.
Yeah, and that's what I'm saying is, like, they might, you might be able to plug in
McDonald's.
Yeah, that's your odds of this just went up.
So when we come back, we're going to talk about AI and financial education, because someday AI is going to be able to do a lot of this for us. Will it replace financial education? It could.
Yeah,
it's not going to happen anytime soon. But we're going to talk about really how does a person position themselves to take advantage of this stuff, and we'll do that when we come back from this break.
I am learning a lot, and it's easy to understand. Andy is fun. Andy's very enthusiastic to watch. He makes it a lot simpler to understand. I'm really benefiting from everything that he's teaching. I think the most valuable thing I've learned from Andy so far is the fact that it's not scary and it's easy to do.
Anybody can do this with the right amount of education, effort, and willingness to learn. You can learn it too. Andy, thanks for making this simple. Thanks for making this fun. Thanks for pouring your heart into this. Thank you very much.
Welcome back to the Cashflow Academy Podcast. I'm Andy Tanner. This is where we do our very best to make investing simple. I'm joined by Corey Halliday and Noah Davidson, my two best investing buddies, and we teach together, we learn together. Like, subscribe, notification bell, and most importantly, go to yourinvestingclass.com and learn. And speaking of your investing class, I'm going to repeat myself. Learn to trade stocks. I would implore everyone to learn to invest in stocks. Learn the 4 pillars. Here's why. I just don't see the explosion available. Like someone, I'm going to start my own business. Okay, great. I'm going to go buy a piece for a strike. Great, go do it. Go buy some gold. But the explosion in business as a result of nuclear energy, quantum computing, and AI, and that little trifecta and how those may intertwine with one another, it's just, you got to own stocks and you got to learn how to own them. There are principles, like AI is certainly, like you say, this is a 2040 deal. Like people say, hey man, I'm like, try this. Type in ChatGPT and say, give me the best stocks to buy so I can be a billionaire. It's not there.
I've done that. It's given me a pretty good list of stocks.
Yeah.
But it probably
gave you
gave
something to work with.
It probably gives you the stocks that have been the best recently.
Exactly.
And it says, oh, here's the one. And they're almost, let me say they're basically never the ones that are the next best for the next 20 years.
ChatGPT is awesome for menial tasks and, build this spreadsheet for me. But if you ever really have a conversation with it, it's incredibly inaccurate. The problem with AI ChatGPT is that it's sourced from humans. So what I found is it has a lot of the human flaws built in, mostly rhetorical context flaws of lying. It lies just incessantly. Books that don't exist, reports that aren't there, players on a roster that are not accurate and true. It's not accurate. That's why there's a disclaimer at the bottom. Hey, when it's important, you better double check your stuff.
Yeah.
So it's really, really, really important that we still, as human beings, learn, because while they can do menial tasks, it doesn't learn as well as we do yet. So learning is still the premier skill. It still is, and it'll be for a while.
Oh, yeah.
Who knows what it comes up with by 2040. But if a person doesn't own this stuff, because you can only own it, it's not going to get cheaper, I don't think. You'll have a few, and you'll have some cycles where you can buy some bottoms. But 40 years from now, you're gonna absolutely. Google came out at what?
Like $80 a share or something.
What was that? No, I thought
well,
it was
it's
even
been
less
split
than that.
adjusted so many
The
times.
IPO
when
on Google, I think it was $80 to $100 a share.
It was like 80, but it's split adjusted. It's probably like $4 or whatever it is.
I mean, if you were buying Google at $4, you're never going to get a chance to do that again.
Never.
And what's crazy is that's a rebirth for Google. It's a rebirth for IBM. It's a rebirth for NVIDIA. It's a rebirth for Apple. It's a rebirth for Meta, to where even at these PEs, they might be value stocks, especially if they pull back a bit.
You think about the financial markets and AI and the ability to replace some of what we do. The problem with that is I think a lot of what we do and what we teach is behavioral, much more than it is, because anyone can learn, a
recipe,
a bull put spread or whatever the strategy is. And Warren Buffett didn't make his money because he had this system that nobody else could learn, that he was the only one that's smart enough to. No. He made his money because his temperament is so much better than everyone else's, because he has a calm about him where he doesn't get caught up in the fear and he doesn't get caught up in the greed. And he's learned certainly some principles of, you want to own for the long term and you want to do this and that and buy when they're cheap and buy on people's fear. But it's behavioral. That's what he emphasizes much more. And so the behavioral aspect of it is, I think, something that you need constant education. Like I look at people and they can't just learn the behavioral once and go, oh, I'll be good when a bear market comes. I'll be prepared for it 7 years from now because I learned that, well, you should buy when others are fearful. It just doesn't work that way. When people are caught in that period of time,
they lose
if
their
it hasn't
mind.
been reinforced and
well, and
in that
that's
education.
kind of what I meant when I was talking about the .com era. Like it wasn't not the actual money in the the technology. The behavioral aspect of people being all excited about it and getting ahead of it and seeing that it paid off 20 years down the road. Yeah. So it's the timing and the temperament and just coming back to that and saying, you can buy those things right now. I have a game plan to control the risk on the downside because I don't think I'm going to time it perfectly by any wild stretch or that I'm going to pick the very best horses to win that race. It's one of those things where I can say, okay, these are the top contenders right now. I can own these stocks. I can protect them on the downside and lower my cost base in the event of volatility picking up in the market correcting. And then, the big profits coming in 2040.
Exactly.
So,
and if you have that mindset, think about the difference in temperament where you're like, man, this is going to pay off for me big in 2040. People don't think that way. Most people, the public.
As soon as we say that, our listenership drops because they're like, okay,
they're like, no, I want to make
these guys are, Daddy, I want an Oompa Loompa today.
Exactly.
It's get rich. Oompa Loompa now.
Yeah, I want one.
It's
today.
Get rich quick mentality, but that's the world we live in. But if you have the proper temperament, you're going to be killing it in 2040 when these people are still trying to get rich quick and they've made nothing.
They have no job.
They have no assets, and
it's never been a more important time
for sure.
The further along you go. So 2 or 3 trends. First trend, AI, that tech. Second trend, quantum computing. That is so interesting to me. IBM. You have Google making strides with their little chandelier, stuff and keeping it cool and all this crazy tech. But the idea to stabilize, the problem with quantum computing, the biggest problem they have is keeping it stable long enough for it to work over long periods of time.
Yeah.
Because you have this everything that is existing between a bit of on and off of 1 and 0 and everything in between, and trying to stabilize this in a way where they can use it effectively is quite an intellectual stretch to understand it, but to stabilize it. And IBM, they've made some big strides, in being able to stabilize and keep it in a state where they can use it longer before it kind of doesn't fly for them anymore.
Yeah, and that's one of the things that I've loved about IBM is you're getting AI quantum computing exposure at a relatively cheap valuation compared to many other things.
Their PEs,
it's been in the 10 to 20-ish range. I'm not sure where it is exactly today, but you're looking at all the other companies that are in the 40s, 50s, 60s.
Heavy investment.
But, and so even if it doesn't pan out quite as well, you could still make money in that investment. And if it does, like if they strike it big in some of these areas, then it's a home run. It's a grand slam.
It's a new one.
But I think AI, I'm so excited about some of the stuff. So I was watching Thursday Night Football, and it's on Prime, and it's powered by AWS, Amazon Web Services. So if Amazon broke apart, I wonder if their web services, their technology division's probably bigger than their retail. If they were to spin off,
Could be.
Amazon's almost a $2 trillion. I wonder if the web portion's 1.2 and their retail might be 800 whatever. But it was cool watching this. So I hadn't done this before, but they had a mode of the game that was basically using technology, and so when the runner would run, it would show his trail, and it would highlight the players that were most likely to blitz, and it would give you a notification whether the defense is in a zone or a man. And so as you're watching this entertainment, if you know more about sports, it made it awesome because and it would show these statistics of the probability of this catch percentage was 1.4%. And, and so you're having this experience where you're watching the game, but you're getting all of this data.
Analytics.
Now, some people might hate that. But for me, I love the numbers of it. Like, oh man, that's
Man, I bet your sports betting is going.
yeah, exactly. And I'm sure the sports bettors are just loving that stuff. But it made the viewing experience actually that much cool, because like when you watch basketball,
you see
watch
stuff
it,
other people don't see.
Exactly.
Yeah.
But it's kind of cool to have all of this information. Some people just want to sit down and not think and watch the game. I get that too, but it was pretty cool to watch
have
this
that option anyway.
and have that option of, man, seeing a lot of the statistics and, hey, this is a 3rd and 12 and the odds of picking up a first down in the NFL at that yardage is low percentage. And so
it'll change education too, because at the Cashflow Academy, we'll be able to use this to find people's, like we do a pretty good job of helping people where they're at.
Yeah.
But when you can design programs and tutors for people, I mean, I can't wait to implement some of this stuff. In the
here's your goal, and here's your probability of hitting that based on your,
and here's your age,
and so
here's how you think and how you learn, and
and
here's
things you need to do to increase that.
Our education already leaves schools in the dust
for sure
because of the utility of it. Most of the stuff people learn in school is the same as the 1800s. You know, you got a classroom and someone talking about general stuff.
Yeah, and you've already built a program that kind of talks about, well, what are you striving for, and how much percentage return will you need? But it'll just get better and better. Cool stuff.
So you got AI, you got quant, and then you got energy. Let's talk about energy for a minute. So in our last podcast, we talked about how it's a little bit difficult to buy things now. So I bought some. I sold some puts to get it put to me, missed the train, got paid nice premium. You were in. You made more than I did. Not freaking surprising.
If you just joined the Illuminati already,
if I could just get, I don't know how to join. I don't know what kind of, sacrifice.
Well, it involves sacrificing animals and things, so I hope you're okay with that.
I know you got chickens and stuff, Ozzy Osbourne.
Yeah, exactly.
So anyway.
Noah went out and got ducks, so that's why he wasn't invited in.
He's been eating duck eggs.
Yeah.
But you ate a duck egg, didn't you?
They're delicious.
Oh, my goodness. He's eating duck eggs.
If I had served it to you on a plate with some bacon, you wouldn't know the difference.
I'd know that it was bigger, isn't it?
A little bit bigger.
A little bit bigger. So anyway, quantum computing, AI, energy. I don't think it's just fission or fusion, whichever one they try to do. The fusion's really hard to do, but they're going to figure it out. These guys, for someone who doesn't know a lot about computing, the fact these guys want to build their own plants to get wholesale electricity means their electric bills must be astronomical already.
I think they're already at a bottleneck for energy needs, and looking out in the future and going, we
need our own nuclear power plant.
We need our own nuclear power plant. And so now Microsoft, Amazon, and Google have all entered into multi-billion-dollar contracts for nuclear plants. And those are the 3 that I know of just in the last week or 2.
They need wholesale electricity. So what that tells me is energy across the board is at a premium. Yeah. And I love this idea, because now you've got your tech play, you've got your Bitcoin play, you've got every kind of play you can imagine. I bought some utility. I don't really care how they make this stuff, but I don't mind owning a utility to have it. And I just think there's a huge need for all kinds of energy, whether it's
utility, basic materials. You can just look at the mining stocks, the uranium miners. There's a handful of plays out there. They're making ETFs right now specifically for uranium, because they think that the demand for that's going to go up. So, and
I still think owning companies is better than ETFs.
There's
ETFs,
trade-offs. I mean, there's pros and cons to both,
ETFs.
And I prefer owning companies. For me, it always comes back to, do I have options? Can I hedge my bet? Because the ETFs have that, but they get really, really lean.
And ETFs, let me tell you how ETFs work. It's a lot different than a company works. And you tell me if I'm wrong. You guys tell me if I'm wrong. If I'm gonna be a uranium company, then I'm into that business. I'm gonna get some uranium, and we're gonna sell it to somebody, and we're gonna mine it, and enrich it, or whatever we have to do to sell it. ETFs start this way. A bunch of guys come together and say, hey, let's make a lot of money.
Yeah.
Let's go make a lot of money from people and build an ETF because we want to make a lot of money. And I remember years and years ago, Robert Kiyosaki called me. He says, Andy, these guys want to they've approached me and they want to do a Rich Dad ETF. And talk to them, right? Just talk to these guys. And it was so funny because these guys had no idea about anything other than they wanted to make money. I said, so what's this ETF going to be on? They go, we'll just use your strategies, Andy. You show us what your strategies are. We'll put them in the computer, and then we'll have this ETF and all this stuff. And it's just, I said, how are you going to know that my strategies work? They said, well, we'll back test them. I says, oh, okay. You're going to back test all my strategies. All right, wonderful. That's like saying no one will ever break a 4-minute mile.
Yeah.
All of those strategies work until they don't. And you can't really program it based on principles. You can only program it based on strategies. It's hard for these guys to understand.
Yeah.
But these guys wouldn't know how to invest their way out of a wet paper bag. And I said, Robert, you do what you want, but my opinion is don't walk, run. Because they just were there to make money. They weren't there. There was no value in what they were doing. They knew there's a big brand, it'll get attention, and people throw cash at it and we'll make money. And it's just silly.
We create a little shell company that'll hold the stocks, then we charge a little service fee. And it's all about that little...
It's the middleman.
Yeah.
They're a middleman.
Right.
And it's like REITs. Just a lot like a REIT. Right? You're going to get paid this fat dividend, but...
They're a casino that tries to bring in buyers and sellers and have no risk and make the little spread.
They're spread
and that's
makers.
what ETF companies are. And, when you're buying an ETF, you're basically suggesting that you're ignorant to what the best company is. You're saying...
You sound like Warren Buffett.
Yeah. I mean, you're basically saying, I don't know which one's the best, but I want to play this trend in X.
Where do you use an ETF? I think, let me tell you some ETFs I love, not to digress too far from our trend topic, but if you want to play around with gold, that's a great...
The GLD.
Speaking of gold, it's been on a tear.
Yeah, that's
another interesting hedge concern for me. It's like the fact that I'm seeing gold and silver hitting these all-time highs.
Yeah, that's
and
weird.
At the same time, the market's hitting these all-time highs.
And even though the U.S. dollar's on an absolute tear to the upside, because historically,
it's crazy.
U.S. dollar straight up
it's
and
negatively
gold straight up.
Yeah, it's normally negative.
That doesn't make sense.
They're usually inversely correlated.
Yeah.
And then for hedges, if you want to buy some puts and you want to buy some puts on the SPY and get hedged, if you want to beta
using ETFs for hedging.
So there's some. I'm not saying ETFs are all bad. There's some good to them, but go buy the Bitcoin ETF to get exposure. Well, just go buy Bitcoin then.
Yeah.
Just go buy the coin.
Yeah, and the only reason I would say that Bitcoin ETF might be superior to Bitcoin is you can cash flow it. Now you can cash flow Bitcoin
the spreads
as well,
are
but the spreads are wide.
They're terrible.
The ETF, the spreads are tighter.
Yeah.
And so there are some from
Isn't
the
that
cash
weird
flow
that
side.
There's better spreads on the derivative than the underlying.
Yeah.
That's a little weird.
It is, but it speaks to the difference in the markets. Like people have traded options on the ETFs for so long that the ETFs just naturally have better liquidity. For
whatever reason, you go from cash to ETF easier than you can go, because now you got to go stable coin, you got to go tether, all that stuff.
And
anyway,
you have to worry about someone stealing your hacking in. The AI that you're trying to program actually steals your Bitcoin and takes it from you, and then you're like, oh. So now you can't write any calls because they just took your Bitcoin away. Well, at least if you had the ETF, you don't have that risk.
Yeah. So anyway, energy. Back to energy. That's amidst this feeling that there's surface tension. It's so weird because there's this surface tension in what we might call a bubble. Unbridled greed pushing it higher, Schiller PE pushing it higher, inverted yield curve suggesting proximate fear as opposed to distant fear. all this stuff in a surface tension, and yet underneath it, inside that bubble, there's that AI, there's that energy play, and there's that quant play, that technology play.
I think it's both. I think it's a bubble that's going to burst, and I think there's real companies that are going to make massive amounts
right in the middle
AI
of it, emerge from it
in 2040 or whatever. And so we're living into different dynamics of are we too far, too fast, et cetera? Are these companies going to lose money initially on AI? Are there a lot of frauds in AI? The quantity of companies mentioning AI in their earnings reports, in the last earnings results, I think it was something like 60 some odd % of companies mentioned AI in their reports. So when everybody, the whole world is focused on this one thing, that's typically how bubbles form, right?
Yeah.
The same thing happened with .com. And so I think you're going to find there's going to be a lot of companies that will change their name and their symbol to something related to AI.
Oh, geez.
And these companies won't have anything to do with AI, and they'll never succeed, and they're just frauds that are trying to pretend to be AI companies. Yeah. And those are the zombie companies that'll never have a chance. But you are going to find when you go to 2040, and it's hard to know who it's going to be, but there are going to be a couple of companies, a few companies that, like the same way that with www. There's going to be the Googles, there's going to be the Apples, there's going to be companies that somehow, some way they figured it out. And, there's probably other companies that would have been, but YouTube would have been massive, but Google bought them out smartly, so they became part of. And so there's going to be other companies that are outside of Microsoft and Google, and they'll see the writing on the wall, and Microsoft will go, that company is doing things in AI, and they'll buy them out.
They'll even buy the bad ones, like Yahoo bought Mark Cuban's company for $5.7 billion.
There will be some swing and misses for sure.
Just in case, but they're big enough to do that and handle that stuff. All right, last one, healthcare. I think that's a rough one because there's so much COVID fatigue that anyone that creates a new vaccine is just like, no.
Yeah.
No. There was such a breach of trust in that, and so much misinformation, such a political, it was politicized to a degree where stuff like that is just really, really scary. On the other side, you got Ozempic.
Yeah. Ozempic, yep.
You got Ozempic, which is...
Yeah, and Novo Nordisk is on sale right now. I mean, off the highs anyway. It's down.
Is it?
I think the easy solution is very, very tempting. As far as drug companies go, like if they got a large portfolio like the Johnson & Johnsons of the world, you probably got some stability there. But for the, for that trend and the fad of the weight loss drug, that's human nature. I think is kind of the thing that you're betting on there is not so much that who's got the best pill, it's that people are going to buy the pill.
Yeah, and the two big companies in that space are Novo, who you mentioned, NVO is the symbol, and then Eli Lilly, which has, is it Mounjaro? LLY is Eli Lilly's stock symbol. And those two have been, you can see it in their stock charts. They've been the two big winners to this point. And other companies, are trying to get into that space. It's a fad, but it's not going away either.
I wonder if it's a fad in that it's maybe not the ideal way. Like, got big guy like me, I think, gee, I can eat less or move more or eat that pill. That's tempting. But, I had some dear friends and even family members who, that type of stuff kind of runs in my family a little bit.
Yeah.
And I remember some friends and relatives that were talking about getting a bypass surgery. It says, you out of your mind, you're doing that, you're young, what are you doing? Save their life.
Yeah.
And if you're not going to eat less and move more, maybe I need to go under the knife and join them because long term, in other words, is Ozempic worth these side effects? I guess we'll find out if it is.
Yeah.
But that's certainly a trend.
That's always the scary part is obviously the best thing is to not take anything because then you I mean, the body is built in an incredible way, but anytime you take a pill, I mean, there's a reason that they run the commercials and they say, you may experience this, and that. Well, those are real symptoms, right? That somebody somewhere has experienced. And so it's one of those things where, of course, the risk to reward is always what people are weighing. And some people get to the point where they're like, I'm not going to diet and exercise, so this might be the better solution.
Healthcare is a tough trend to call because why do you like real estate? Because it's a necessity of life. People are going to pay for real estate. They're going to pay for food, clothing, shelter, right?
Yeah.
But they'll also pay for healthcare. I mean, they want long life.
Long life and looks. Yeah. People care about how they look, and maybe not enough to. Maybe not enough.
How we say people care is if, like, we're not part of that group. That was a total third person because we don't care.
Come on, you're so vain. You probably think this podcast is about you.
I mean, my wife can barely get me to comb my hair for this podcast. Are you kidding me? Right? Yeah. I mean, what do I care?
I say people because. We probably don't care as much as most people.
We don't care as much.
I mean, I haven't bought my own clothing in a long dang time.
My poor wife,
Yeah.
There's the BBD is out there. She's just too tired to look, I think. The BBB, you know what the BBD is?
Bigger, better option.
Bigger, better deal.
Yeah.
But the other thing that's hard about healthcare is our healthcare system's broken. And when that breaks, what does that do? Does it help it or hurt it? I think it probably hurts it. It's really, really easy. If you subsidize education, the cost of education will go up. If you subsidize healthcare, the
cost of healthcare goes up.
If you stop subsidizing those things, the cost will fall because the demand will fall because people don't have the money to demand it. So I think that's kind of a scary one. I think I like tech better. I think I like energy better. I have not ridden the Ozempic wave. I haven't bought any. Have you bought any of that?
No, I've got butterfly spreads on it. We're just limited exposure.
So you're trading it. You're not owning
for
it.
Stuff that I don't have a ton of confidence in,
you trade
I will use a limited leverage type setup where, again, I'm not going to type a bunch of capital in something that I just don't have. Like, it's easier for me to tie up capital in in a tech stock like Microsoft. That's not hard.
You're trading it. You're not owning it.
Yeah.
Okay, that's fair enough.
But I position trade it, like longer term. Like I'll give it out till March and set it up with low risk, high reward.
Stuff like that.
I've done some of it. I've actually had more.
Did you buy it or trade it?
I've bought some, but I've owned more in AbbVie, and AbbVie is kind of famous for having bought out Allergan, which I think is the biggest company in plastic surgery. So apparently I have more money in the idea that people care about their looks than just the Mounjaro and Novo plays. But I think at the end of the day, that those are trends in healthcare that you can see it in the charts. That the earnings, the revenues, all of that it's been trending in the right direction.
For the Ozempic face, could you put Botox and fillers in to kind of
it back
up?
Oh
my
I'm
goodness.
sure.
Here we go. We go. Oh boy.
See, here's what you do. You go buy Novo so that you lose weight, and then you buy AbbVie so that you get the breast implants or whatever.
Put it right in the back. Put all the stuff right in the back place.
Exactly.
I'm all for it, man. To each their own. I don't care.
Well, we're going to live this transhumanist world where it's all going to be altered.
Okay, now we got our tinfoil hat on. This has been the Cashflow Academy Podcast, and I'll bet you think this podcast is about you because it is.
It is.
That's what it's for. We do it for you. Hit like, hit subscribe, hit notification bell. Hopefully that gives you an idea of where we're positioning. I think there's a lot of tension in the bubble, but I think underneath that there's opportunities in energy. I think there's opportunities in AI, and I've invested in some of that stuff, and even the nuclear play. We bought a tiny bit of that even this morning. So with that, we hope you enjoyed our conversation about different trends that might survive the bubble and do well in it. We'll see you next time.